If you gave me $1,000 today and said, don't lose this, grow it in 2026, I wouldn't buy random crypto. I wouldn't day trade. And I definitely wouldn't let it sit in my bank account. I'd follow a very specific 5-step plan. And step 3 is where most beginners mess up. Look, $1,000 isn't a lot of money, but invested correctly, it can become $10,000, then $50,000, then 6 figures. In this video, I'm breaking down exactly how I would invest $1,000 in 2026 step by step as a beginner. No hype, no complicated terms, just strategy. And stay until the end, because I'll show you how I'd turn this $1,000 into a long-term money machine. Step 1. I wouldn't invest it immediately. I know, that sounds weird, but here's why. If you don't have at least 1 month of expenses saved, your investments become emergency money. And emergency money always gets pulled out at the worst time. Imagine this. You invest $1,000. Market drops 20%. Your car breaks down. Now you're forced to sell at a loss. That's how beginners lose. In 60 seconds, I'll show you exactly where the first dollar actually goes. Step 2. $300 into safety. If I had zero savings, first $300 goes into a high-yield savings account. Why? Because stability creates confidence. Confidence keeps you invested. And investing is more psychological than financial. Real example. My friend invested everything he had in stocks in 2022. Market dipped. He panicked. Sold everything. If he had just $500 saved, he wouldn't have touched it. That small cushion would have saved him thousands. Okay, now comes the part where we actually start building wealth. Step 3. $500 into low-cost index funds. This is the core. $500 goes into a low-cost index fund, not individual stocks, not guessing the next big company, just the entire market. Why? Because over the last 100 years, the stock market has averaged around 8 to 10% per year. You don't need to be a genius, you just need to be consistent. Let's do simple math. $500 invested at 8% annually for 30 years becomes over $5,000. That's without adding another dollar. Now imagine adding $50 per month. Now we're talking serious money. But here's where most people ruin this strategy, and it has nothing to do with what they buy. Step 4. Automate $100 monthly. The secret weapon. If I only invested $500 once, that's good. But if I automated $100 per month, that's powerful, because automation removes emotion. Emotion is what makes people buy high and sell low. Automation builds wealth quietly. Let me tell you something interesting. Most self-made millionaires don't watch their investments daily. They automate. They ignore noise. They let time do the heavy lifting. I once met a guy who started investing $200 a month at 22. Nothing fancy. By 40, he had more than $250,000 invested. No lottery wins. No viral crypto play. Just discipline. And now we get to the controversial part, where I'd put the final $200. Step 5. $200 into asymmetric opportunity. Here's where it gets interesting. $200 goes into higher risk, high upside opportunities. This could be a promising tech stock, a small crypto allocation, a skill course that increases income, even starting a micro side hustle. Why? Because asymmetry is powerful. If this $200 goes to zero, you're fine. If it 5 times, that changes everything. This is controlled risk, not gambling. Strategic exposure. And here's the mindset shift most beginners never understand. The real goal isn't 10% returns. Your first $1,000 isn't about getting rich. It's about building the identity of an investor. Because once you learn how to invest $1,000, you can invest $10,000, then $100,000. The habits matter more than the amount. And I haven't even told you the most important rule yet. The rule that protects everything. Never invest money you need in the next 3 years. Short-term money stays safe. Long-term money grows. That one rule prevents 90% of beginner mistakes. And if you follow this entire structure, here's what happens. You build security. You build growth. You build upside. All with just $1,000. Here's exactly how I'd invest $1,000 in 2026. $300, safety cushion. $500, index funds. $100 per month, automated investing. $200, a symmetric opportunity. Simple, balanced, powerful. If someone gave you $1,000 right now, what would you invest it in? Comment below. I'm reading every reply. And if this video helped you think differently about money, hit subscribe. Because I break down investing in a way that actually makes sense. Your future self will thank you.